Well, let's turn to some disruption now. Disruption in the back office. Registry Direct is a small player that plans to take on the big incumbents, Computershare, Link Market Services, and indeed Boardroom, which has been growing, to offer registry services in a more self-service way for both listed companies, also the much larger private company market. Registry Direct listed yesterday, having successfully raised $6 million, I think, and Managing Director and Founder Stuart Rowe joins me now. Well, Stuart, congratulations on your listing there. You've kept half the business, is that right?
That's correct. I've continued to own a bit over half the business, and it's a very exciting day for us to get the listing away. It actually happened today and started trading at 11 a.m. This morning. Tell
me a little bit about the business, what companies are looking for, and why you think there's room for another one.
Well, sure. Thanks very much for that. So basically what really differentiates us from the traditional links and the boardrooms, as you talked about in Computershare, is that we make our software available to any company. So you can be a startup company or maybe a public unlisted company. You can use our software on a as a service basis, self-administer your register, deliver to your clients and your shareholders, Computershare style of interaction and services and capabilities, but do it at truly a fraction of the cost. And in fact, for people who've got less than 10 shareholders, they can access the system for free. For people with more than 10 shareholders, obviously there's a small fee, but it's a very marginal sort of $30 to $50 a fee per month. And so it means that it simply opens the market up to a whole range of unlisted companies in the private space that simply couldn't get access to this type of service levels for their shareholders. And that's really exciting for us. We estimate there'd probably be 100,000 private companies and unlisted trusts that we'd be able to tap into market segment where we've really got a material competitive advantage.
Now, presumably the big incumbents, the big two, and a company like Computershare is not going to take this line. What sort of market share do you hope to get off them?
Well, reality is it's in this private space that Computershare and Link don't really operate. They'll certainly service at the top end, the listed companies. They may service some small, some very large private companies, but they simply actually aren't in the market at that private space. The sort of companies that are more like us globally around the world accessing the sort of the private space would be firms like eShares in America or CapShares, and they're the sort of peers that we'd say that we're more comparable to than a Computershare or a Link. Now, that said, we do actually compete against links in the boardrooms, etc. We're very competitive on a price perspective and a service level perspective. But like I said, what really differentiates us is accessing that private market space.
And if you are looking at the public space as well, do the incumbents offer extra services that you don't, given that you're obviously a cheaper service?
Yeah, I mean, clearly they're more mature organisations and they have a deep level of service offering. We're obviously a relatively new, new player in that space. Now, that said, I think my view is that when it comes to the listed space, it is quite a competitive and commoditised product that's required. We can certainly deliver all the services, or the vast majority of services that the larger guys can, and really do it at a, historically at least, materially lower price. We've certainly seen some competitor reaction to firms like ourselves and some others that have really entered the listed space. And so it's going to be, a very competitive landscape looking forward in that space, and I think it's going to make it tough for, the traditional players, actually.
All right, okay. To what extent does it also put the investors more directly in touch, I suppose, with the issuer? Is that something that's a bit different?
Yeah, and so you're correct, and that's very much what we're endeavouring to achieve. We really want to, inspire more shareholders and more people investing in businesses. We want to make it much more engaging for companies to like I said, to engage with their shareholders and attract new investors, as well as their employees. And we see this, very much happening in that private space. A great catalyst for us is what's been happening in the equity crowdfunding space. That's going to be another driver for more and more companies to require registry services, and obviously, that type of space wants a very cost-effective yet professional service, and that's exactly the sort of target market that we can meet.
And this $6 million, what's it going to be used for?
It's principally to educate the Australian marketplace of our products and our services. It's to further roll out extra capability, particularly around employee share schemes, administration, and to employ additional staff in the lead up to our expected growth in numbers of clients that we're likely to take on.
And presumably the market at the moment, both public and private, it's fairly buoyant in terms of future business prospects.
Yeah, so certainly there's a lot of activity going on. We're seeing more and more of it, like, as I mentioned, in the private space. Certainly, when you consider how historically, unlisted private entities have had to manage their share registers, they've typically done it on a spreadsheet. Being able to access a sort of technology platform like ours, just makes it a lot more engaging for those people. And certainly we're starting to, we're taking on, via accountancy practices, for example, clients in the hundreds. So both on a freemium basis for those with less than 10 shareholders, but also on a paying basis. And so, we're both excited, and obviously, it's tremendous to be able to offer these sort of additional services to these clients that traditionally haven't had access to the technologies that the larger listed companies have had access to.
And Stuart, how long has it taken you to go from, complete start-up to where you are now? This is obviously a cloud-based thing, isn't it?
Yeah, it is a cloud-based technology. So I actually sort of commenced the business on the side of a previous business that I was involved in back in 2014. So it's been a slow build-out. I sold out of my historic business, my previous business, a couple of years ago. And it's only since the start of 2016 that I've really tried to ramp up the entire operation. And so, it's like everything is an overnight success. It's never quite an overnight success. It's a lot of years that have actually gone into getting to where we are today. But certainly, have we got more to do? We certainly do. But it's, looking forward to the challenge ahead of us.
Yeah, and all that data you've got.
And all that data. So thank God for Amazon. Amazon Web Services, without that type of cloud technology, wouldn't be able to deliver what we can. But it's interesting, like I said, that type of technology that's available today, despite the fact that, the idea and concept of what we're about, completely originated myself. We've seen it, happening in America, and it's just sort of convergent thinking. Technology simply allows these types of services to become available on, to the mass market.
Stuart Rowe, I wish you all the best. Thank you very much for joining us there.
Well, thanks very much, Steve. Thanks for having me.
Well, somebody who says thank God for Amazon. There you go. Well, back to our